Hi, Heather Prekop here, Senior Director, Global CPG with Euromonitor. Today we have Matt Berry and Bob Hoyler here from our Chicago office. And as you may have seen, Matt and myself, we had been at CAGNY last week attending to hear the presentations across 31 different presentations within the CPG space. And Bob Hoyler here from our channels research, retail research, is here to speak a bit to some of the trends that we saw, which Matt will be helping moderate. Matt, over to
Everyone,
you.
everyone. So yeah, I'm Matt Berry. I'm Food and Beverage Insight Manager. I'm not a retail expert though, so I'll just be really asking the questions, letting Bob tell us about what's going on. So a couple of channels we want to talk about today. I want to start out with C-stores. It was definitely a focus for some companies there. Thinking particularly Molson Coors, which very much spoke about C-stores being a channel they want to optimize for, develop products specifically for. I was wondering, Bob, you could start us off by talking about, what's the outlook for C-stores? Do you think companies should be focusing on this channel? What are some challenges there? What are some strengths?
Great question, Matt. And yeah, I'm Bob Hoyler. I'm our industry manager at Euromonitor for our retail and digital shopper systems. So thanks for having me on, by the way, guys. But
Yeah.
the C-store question is a really interesting one. It's a kind of unique channel. When we kind of zoom out and look at it on a global basis, convenience stores are thriving, and this is as a result, I think, mostly of the increase in urbanization we see, especially in developing markets. So we look at Latin America, we look at Southeast Asia, we look at India. C-store sales are booming as more people move into cities. They're growing affluence, which means they're kind of trading up from maybe more traditional grocery formats to C-stores, and the C-stores themselves are expanding their offerings, right? They're integrating consumer food service offerings, things like that, to make them more attractive definition or destination. So when we look globally, C stores are doing amazing, right? They're one of the best performing channels we saw in 2024 on a global basis. In the U.S., however, it's actually quite a different story, where we've actually seen in 2024 convenience store sales declining. They're, at least in terms of their retail sales. Now, it's a little bit different story when we kind of pull out C stores from like forecourt retailers like gas stations, which are holding a bit better. They're holding a bit steady in terms of their sales, at least in terms of nominal sales growth. They're performing okay. Not when you look at your top line sales for them, but when you kind of strip out the fuel sales, the retail sales, the merchandise sales have been performing okay. But I wouldn't say they've been doing great either in 2024. But when you look at convenience stores specifically, it's a story decline, and it has been for at least a couple years. And I think there's two main reasons for this. So one is, um, unlike what we see in like developing markets, we don't have an urbanization wave in the United States right now, right? It's actually quite the opposite. Uh, you could say it started in the pandemic, but I think for people who are paying attention, it actually started far before that. I think you go back to 2017, where you actually see uh, individuals in the country migrating from urban centers, urban cores, out to the suburbs. And that's really accelerated, though, since the pandemic. And so instead of an urbanization wave in this country, you actually are seeing a suburbanization wave. And as a result, that doesn't really benefit C stores. If you think about typical convenience stores like your 7-Elevens, it is like the urban retail format. You walk up to the store, you go around the block, walk up to the store, get your kind of um, your a couple impulse items or just kind of items you need immediately for the day, and then you kind of walk out. In if you in a shift to the suburbs, that changes quite a bit. You could still drive to a convenience store, but you're just as likely to be able to drive to a Walmart or another format just as easily. Kind of eliminates the appeal of the convenience store a little bit. And additionally, it's just the other problem they've had. So the other issue is that they're not really seen as a value focused channel, right? Convenience stores, the price of goods in convenience stores is usually going to be quite a bit higher than what you'd see on a general basis, but anyway, than what you'd see in like a hypermarket like Walmart, or even in a lot of cases supermarkets, depending on the product. So those two kind of issues, the fact that you have suburban areas of the U.S. growing in population a lot faster than you have the urban cores now, plus the continued focus on value-focused retail in the U.S., which is a huge story. The fact that consumers are still very price conscious. There's macroeconomic and political uncertainty that they're kind of reckoning with right now, and that's really causing them to continue to ration their spending. That hasn't benefited C-stores. So I think in terms of its long-term prospects, it might not be the best growth channel. Now, I do 100% concede, Matt and Heather, that there's a couple areas where I think there are an interesting growth prospect for some categories. Like for alcoholic drinks, as we've seen states deregulate alcohol sales over the last 5 years or so, that's really opened up a brand new opportunity in some states for alcohol sales, and that's been helped to kind of create a boom in sales of alcohol through that channel. But for a lot of other product categories, especially the ones that have been in that channel for a long time, like snacks, confectionery, things like that, non-alcoholic drinks, it might be a tough play to be C-store. I wouldn't necessarily peg them, this convenience store channel, as a growth channel going forward in the United States. Certainly as long as we see this kind of suburbanization wave continue.
It's interesting that Celsius mentioned specifically turning and the energy drink category from an impulse-driven category to a pantry-loading multi-pack category. And it sounds like it's really along those lines, a very traditionally C-store focused category, really trying to pivot toward other channels, probably for that reason.
Yeah, that makes total sense. I think if that's Celsius's plan to be, that's just acknowledging that's where the consumers are increasingly going into, hypermarkets, but also some other channels where, big pack sizes might be more popular, like warehouse clubs, for example. That would be.
Let's talk about warehouse club and also the discount channels. I know you've said in the past that really in terms of physical retail, like those are the exciting channels, right? Those warehouse clubs and the discounters. Yeah, we didn't hear a lot about them at CAGNY. I'm kind of wondering if you talk about why these channels are so exciting and why I think some of the companies might have been reluctant to really call out these very value focused channels as things to focus on.
Yeah, well, I mean that's a great question, and yeah, these to me are really interesting channels. The more discount oriented grocery retail channels, and I think when you're talking about unit price, the two that stand out to me are hard discounters. So discounters, which in the U.S. there's really only one that is a sizable presence, at least that dominates the channel, and that's Aldi. Aldi accounts for more than half the sales in the channel. And then warehouse clubs, where it doesn't dominate the channel quite the same way, but Costco accounts for more than half the sales in the warehouse clubs channel in the U.S. So it's really, we kind of almost boil it down to those two retailers are the two most interesting retailers in the grocery retail space in the United States right now. And so I think one of the things is when we're talking about, just going back for a second, talking about the convenience store channel, thinking about that as a growth channel reflects almost a pre-pandemic worldview, in my view, a little bit, because of the kind of the population shifts we've seen since the pandemic to the suburbs and everything like that. But when it comes to value-focused channels, right, these discount-oriented channels, these are where all the growth is right now in the grocery retail space in the United States. When we look at the sales growth, so I've actually taken the liberty of looking in the U.S. in our brand new retail data, which is published on the 17th for our 2025 edition of the system. And I've kind of split out the discounters and warehouse clubs, which I kind of consider the discount-oriented grocery retail channels, versus all of the other store-based grocery retail sales, so excluding e-commerce sales. In 2024, we saw the aggregate sales of discounters and warehouse clubs grow at 3% in constant terms. So that's in real terms. So stripping out the effects of inflation, grew by 3%. Very impressive across the store-based retail sector that actually declined in real terms in 2024. Whereas when we look at the other grocery channels combined, so whether that's convenience retailers, hypermarkets, supermarkets, the traditional kind of channels like small local grocers, et cetera, they actually declined by about 1.5% in 2024 in sales. So it's clear the growth in grocery right now are in these channels that really focus on and prioritize low prices. And so one of the things that makes it hard, though, for brands looking to break into those discount-oriented channels is the fact that when you think about Aldi and Costco, one of the things that comes to your mind, actually, the first thing that probably comes to your mind after you say, okay, low prices, the next thing is going to be private label, right? Aldi, one of the most successful private label strategies of any retailer in the world, right? They along with outside the U.S. Lidl, their big kind of arch rival in Europe and so on, they dominate the discounter space globally. Aldi does by itself here. I know Lidl operates here, but they're not even a fraction of the size of Aldi United States. But they're well known for their store brand, strategy. Most of the items you're going to find in an Aldi are private label products. Meanwhile, Costco, its Kirkland Signature private label line, it might be the most respected private label line in the world, right? It's very high quality, seen by consumers as being high quality, not just in the U.S. but also abroad. And so, because of those issues, and because of their strong private label strategies, it can be really hard for name brands to kind of move into those retailers specifically, and then the discounters and warehouse club channel in general, which because other operators in those channels tend to also have a strong private label strategy. And that's really tough. It's really tough for name brands to get a toehold there when so much shelf space is already devoted to private label. It's a little bit easier in Costco and warehouse clubs because at least those retailers do tend to have some name brands. But man, you got to have some really good relationship with kind of the merchandise team at those retailers, or just be so big that they need to have you like a Coca-Cola, right? Like, so when it comes to name brands, then when our kind of brand clients are asking me, hey Bob, what should we be doing here? And I kind of talk about, well, if you're in grocery, these are the growth channels, and they're like, well, yeah, but it's tough for us to break in, and brands don't want to hear this sometimes, and I understand why, because it's not great news for their negotiating position. But I'm like, well, then you really got to really make sure that your relationship with like the other big boys that are doing well, like the Walmart and the Amazons of the world, so those retailers that have a really good foothold in the e-commerce space in grocery, you really got to have make sure that your relationship with these retailers is on really strong footing. Because if you're a name brand and you can't move into the warehouse club or discounters channel, then that's probably going to be your next best bet.
And that goes something we saw, I think, in probably every one of these chats, the tension between the pricing and the volume, where everyone would like to, increase the prices, but the American consumer is very clear right now that no, they're really focused on those volumes, lower prices, discounts, wherever possible. And that's just a tension that runs through everything. Well, that's all a bit fascinating. We've talked a lot about store-based. Of course, we've not talked about probably the most exciting channel of all, which is our online channel. So I wonder if you could take us through what's going on right now in e-com and anything that you saw from those CAGNY presenters that really stood out to you as an exciting use of the e-com channel.
Yeah, well, I mean, and again, this kind of continues to be where the lion's share of the attention in the space is, at least on the retail side. I certainly get more questions about e-commerce than any store-based channel or other offline channel. In the U.S., we saw retail e-commerce sales in 2024 grow by 4%. Again, in real terms, in constant terms, stripping out the effects of inflation, obviously much higher when you throw in the inflation numbers. In that compares to retail as a whole, which declined by 1% in 2024, and offline retail, so all retail excluding e-commerce, declined by 3%, right? So it's really, e-commerce is really driving almost all the growth in the retail right now. And I'd say other than discounters and warehouse clubs, which again are really bucking the trend in store-based retail by continuing to post positive performance, which really makes them stand out in store-based retail. But e-commerce is obviously where the attention is. One of the amazing statistics that I can share from our retail system, in 2014, the e-commerce penetration rate in the United States out of total retail sales stood at 13%. In 2019, right before the pandemic, it was 20%. In 2020, because of the boom we saw because of the pandemic, it increased to 25%. Now, since then, we've seen retail growth slow down, especially since 2021. In 2021, it was also pretty high. I know at the time there were some industry observers, especially who really wanted to hype, like, for example, the quick commerce space. Like, you can get anything delivered to your house in 15 minutes. They're like, yeah, e-commerce is going to grow by double digits every year now. Obviously, that did not happen, right? Once the pandemic wound down a little bit, consumers reverted to pre-pandemic shopping behaviors. Since that coincided with the increase in inflation, they might be less likely to splash out on a delivery fee right after that. They were more concerned about rationing spending and so on. Even so, even because of all that stuff, Matt, or even despite all that stuff, we still see e-commerce continuing to outstrip sales of the rest of the retail sector by a significant margin. So that, again, from 2014 having an e-commerce penetration rate of 13%, in 2024, that now stands at 29%. So almost, not quite, almost a third of all retail sales in the United States are now taking place online. So we're not talking about South Korea or something. We're talking about the United States. So that's an amazing stat to me. And so one of the things we're seeing in terms of the grocery space in there is that it is an example of the rich getting richer. And I won't talk too much about this because we kind of just mentioned this. But the big players who are making moves in that space are Walmart, which has just done a phenomenal job with its curbside pickup strategy, where in the U.S., when you're talking about shelf-stable goods, people have voted, even though curbside pickup made inroads into some of those kind of non-grocery categories during the pandemic. Since then, people have really kind of switched back to being like, hey, if you can deliver it to my house and it can stay on my doorstep for, a day and it won't go bad, just deliver it to my house. That's going to be the easiest option for me. And especially because you can do that through somebody like Amazon. If you have a Prime subscription, you're not paying for delivery fees, which is a huge inducement to people to order delivery, by the way. But when you're talking about grocery, it's a way different ball game. If you're talking about perishable goods, for most U.S. consumers, it's actually more convenient if they can drive somewhere to pick up an order than if it's delivered to their house. If you're talking perishable delivery, then you have to make sure you're at your house at a certain time. You have to schedule your day around it to a certain extent. Whereas if you put an order for a curbside pickup order at Walmart, then you can kind of just drive to the store whenever you want to and pick up the order, and it's ready to go for you, right? So it's actually, in a still a very car-focused society like the United States, it still is a big convenience to be able to have curbside pickup. So Walmart's ahead of everybody else in doing this, and because of this, actually, coupled with the fact that we're in this really cost-conscious era, where we've seen a lot of consumers who maybe 5 years ago we might have called them never Walmart shoppers, where they would have always gone to Target or some other retailer for some of those mass merchandiser needs or hypermarket needs, because Walmart is able to deliver consistently low prices, and because they also have a really credible grocery assortment, right? If you go into a Walmart supercenter, you're going to have, there's a full bakery, there's a full butcher, and so on. It's something that most Targets just don't have, right? A Target might have a really stupendous packaged food selection, but when it comes time to get fresh food and things like that, Walmart can really deliver on that in a way, because it's really, a supercenter is like really a supermarket, hypermarket operator in a way that Target isn't. So you see kind of some of that sales shift to Walmart as well. But the big secret is that some of these kind of more affluent shoppers that might not have gone to Walmart in the past, curbside pickup allows them to kind of shop at Walmart without setting foot in a Walmart. And for some shoppers, that actually makes a difference, where they don't, they might not, for whatever reason. I think Walmart's really improving their in-store experience, but some consumers might be still hesitant to do that, especially more affluent consumers. But when you can just pull up to the Walmart and they load it in for you, that kind of eliminates that hesitancy to shop at a Walmart. So that's what's going on big in the grocery space. I think overall, though, in e-commerce, though, one of the things we're seeing is just a really interesting development, in that we're seeing kind of these platforms that may have just been conduits for retail sales in the past kind of start to sit back and flex their muscles a little bit and be like, wait a second, brands need us more than we need them. And of course, I'm talking about kind of social media platforms. So what I mean by that is, one thing that we've seen recently, by the way, is in Instagram, for example. So owned by Meta, same company that owns Facebook and WhatsApp, of course. They are one of the most popular social media platforms in the United States. They aren't like a marketplace per se. They're not like a they're not a retailer in the same way that like an Amazon is, but they have developed the strategy of having brands operate storefronts on their platform, right? And 5 years ago, their big push into that was just basically like, hey, we just want the brands to be here. We'll do kind of anything we want to, or anything the brands kind of want to make sure that they are just have some visibility on our platform, and that a consumer would find a brand on our platform. That's an inducement to us. That's something good for us. So we'll kind of motivate brands to come on our platform and open up these storefronts where they can shop. However, we've we've seen them kind of switch their strategy a little bit, where previously they were focused on creating this welcoming environment in order to attract new brands to their platform to open storefronts. But in April 2024, we really saw a major shift in their strategy, where Instagram began requiring all storefronts, so all brand operated storefronts on this platform, to make it mandatory for customers shopping on the platform to check out within the app. So previously, brands were allowed to route customers outside of Instagram to their own proprietary websites for checkout, which meant that Instagram not only lost some of that consumer and transaction data, but they also lost a cut of the sales on that sale. But now they are basically saying, hey, brands, you no longer have the ability to do this. If you want to check out, if a customer is coming through Instagram on the storefront, they have to check out within the storefront on Instagram as well. And this allows Meta to reap even more, right, in terms of commissions and customer data, right? So that this is kind of a not so tacit acknowledgement, I think, of Instagram's and really social media in general. It's their incredible customer reach and their growing indispensability as a sales channel for their brand partners. So we're kind of seeing these social media platforms, as more consumers spend more time online on social media, they're really starting to realize, hey, we're an indispensable partner for brands here, and start to flex their muscles a little bit. And so that's one thing. The last thing I'll say about the e-commerce space is, to me, and this might be a little bit more of a global story right now than a U.S. story, but I think it's really relevant anyway, is that one of the most intriguing retailer in the world right now, and has been for the last couple of years, has been ByteDance. And ByteDance is the Beijing-based tech firm that owns TikTok, social media platform, as well as kind of the Douyin, which is like the Chinese analog of TikTok that operates just within China. So Douyin operates within China, TikTok operates abroad, but they're very similar. They're both short form video focused social media platforms, vertical video format, endless scroll, so on. So one of the things that we've seen ByteDance do is about 2021, before 2021, they really did not have any sort of retail presence at all, right? They were a social media platform. But in 2021, they started to add in some retail functionality into their platform. And then since then, they've really become a retailer in their own right. They're an e-commerce marketplace now. And so they've done this by basically diving headfirst into live streaming e-commerce. And this is a format that we've seen really take off in ByteDance's home market of China, where it's become incredibly popular, where it's, something like 80% of the global live streaming sales are coming from China right now. It's just, it's really took off in the pandemic. And even though ByteDance wasn't really involved in that during the pandemic years, they kind of looked and were like, hey, our format's perfectly suited for this, for live streaming, right? We're a video social media sharing platform. We can easily integrate shoppable videos. We're already set up for basically influencers to kind of give a spiel on videos and hype products. So they dived headfirst into that, and now they're doing very well. So so we've seen them also expand into Southeast Asia big time, and Southeast Asia has really also adopted and embraced live streaming. And so since then, they've also tried to expand into Western markets. And so right now, they're by far the most popular live streaming e-commerce retailer in the United States. In 2024, we have their gross merchandise value, so GMV, in the U.S. in 2024 at about $8 billion in sales. And that's from having no sales in 2022. And in fact, from having, again, no sales globally in like 2020, they're now the 5th largest retailer, not just in e-commerce, but 5th largest retailer of any kind in the world in 2024. So now obviously not everything might be great for TikTok in the US, right? If anybody can break live streaming in the US, it's going to be TikTok. But obviously there's some political situation, uncertainty about their status in the US. Right now, the current administration has kind of paused a ban on TikTok that was going to take place and has kind of extended that to April 5th. So there might be some negotiation about selling their U.S. operations to a different company, or they might make some other arrangement with the current administration to keep operating. So it's not like their prospects are totally rosy in the U.S. However, I think they look a lot better than they did a couple months ago. And so there's a very real chance that ByteDance might continue to operate as a retailer in some format in the U.S. And so even if they don't, though, they're the retailer for me to watch in the world, because even if for some reason they must exit the U.S. market, the fact that they are still so popular in Asia and Southeast Asia specifically, which is one of the most dynamic regions in the world. You look at like Indonesia, it's growing leaps and bounds, right? So even the fact that they have a really great runway for growth there, as well as outside the U.S. Lidl in the UK just became the first grocery retailer to operate basically a storefront on TikTok in Europe, and they had it was an emphasis on kind of like protein products on their storefront, and it sold out like in a day. Like they sold out everything they had within a day on TikTok. Really a remarkable kind of achievement there, and just shows kind of the power that TikTok really could have as a retailer if it's left to kind of develop domestically.
Yeah, well, a lot to think about there for sure, Bob. All right, so I'm cognizant of time. So just want to ask you, any final thoughts you want to leave us with before we wrap this up?
Just that e-commerce is going to continue to be the growth engine of the U.S. retail sector, and then outside of e-commerce, I think we're going to continue to see, due to the whatever happens in the macroeconomic environment, maybe the uncertainty that is impacting the consumer, you're going to continue to see those kind of discount-oriented grocery channels, discounters and warehouse clubs specifically, continue to do very well.
Great. Thanks so much, Bob. Always love the energy that you bring to the table here. And yeah, I think just for, to close out, just a reminder again that we did update all of our channels data just this past Monday. So for those subscribers, do feel free, check out our Passport portal. And Matt, Bob, thanks again.
Thank you both.